All the content contained in this webcast is for informational purposes only. The investments and strategies contained in this webcast may not be suitable for you. Please consult your own independent financial advisor before making any investment or trading decisions. Good morning, traders and investors around the world, and welcome to Monday's edition of premarketinfo.com, where we prepare you for the most important hour of the day, the first hour. Dennis, that sell-off that people were anticipating Friday morning after the J.P. Morgan news seemed to settle in overnight.
Yeah, we actually had a pretty good sell-off here overnight, Joel. Got down to as low as 1335.75. We've bounced a little bit off that area. We're trading 1339.75 right now, but still down $10.
Yeah, mentioned the close at 1350 close there, smack dab in the middle of 1300 and 1400. The high, overnight high, just a point above that, Dennis. So that is going to be a point of control for the entire week. 1339 and a quarter. That was Wednesday's low and a weekly low. We took that out in the pre-market. That will be a major level to focus on today, right where we're trading right now. If we really can continue this sell-off, I'm looking for the February 16th low of 1328.50. Dennis, that J.P. Morgan news did not get any better this morning.
No, it hasn't really. But you know what? JP Morgan got down to as low as 36.30 here in the pre-market, Joel, and it has spiked back up. We're just down 6 cents right now at 36.90. So it has found a little bit of a bottom. I'd obviously keep an eye on that pre-market low at 36.30 in the regular session here as well. But so we've bounced a bit here, Joel.
Yeah, I mean, there's a couple ways, to look at this, issue. Of course, technically you can look at it and see the major support here back in January 17th and 18th at the 34.50 level. That could just definitely be a downside target. A little bit ahead of that, of course, is yesterday's low, which should be a point of control. 36.62 was Friday's low, so have to keep an eye on that. But Dennis, I mean, first of all, we don't know the extent of all the losses, number one. And number two, I mean, how many times have you seen a chart like this? Have you seen a sell-off like this? And how many times have you seen the stock just go right back up?
Well, not that often there, Joel. That's the whole trouble. When you got, something like this happening and there's, unknowns involved, it's hard for the stock to just all of a sudden come back and, oh, this is a one-shot deal and it's going to, dead cat bounce the whole losses back. You often see these things settle in, try to form a bottom, and then maybe slowly start to climb. But we haven't really formed that bottom yet here. It's only been a day. We made new lows again here in the pre-market, lower than Friday's low, so that's concerning as well. So as long as the stock continues to make new lows, I wouldn't want to own it.
Okay, just spillover effect on this. Nothing happened to Wells Fargo, Dennis. We talked about this in our weekly outlook. That 3250 area, like I said,
Wow.
Warren Buffett and the company and Fidelity and Carl Icahn are buying.
Carl Icahn, throw him in there too. Somebody's buying there in that 32.50 area. You are right, Joe, because every time we get down there, 32.43, end of April, May we had 32.46, and then on Friday and all that bad J.P. Morgan news, 32.52. We opened almost down there 30 and rallied straight up. Just show you the daily there. I'll show you from Friday's action. Basically, we opened right down there in support, and we spiked up a buck, Joel, in that first hour. It was a crazy move for Wells Fargo.
Yeah, but then on the upside, Dennis, you've had 4 out of 5 highs between 33.50 and 33.65. So I imagine here over the next couple of days, Wells Fargo is going to make a decisive move, below that 32.43 level or above 33.65. Just the way it's feeling right now, Dennis, may look like we want to go back down into this $31 area, but until we get to 30.52 through 32.43. We'll have to keep an eye on that level.
Or are you channeling stocks.com players? You just keep playing in that channel. If it's worked once, twice, 3 times, maybe it continues to work. So you could play it both ways. You could sit on it and wait for the breakdown or the breakout, or you keep playing, that range and selling it towards the upper end and buying it towards the lower end.
And just on a final note on that stock, if we do break through there, let's say we break down hard 32.20, 32.15, Watch for that bounce back up to the 32.50 because if so many times it was the lows, it just may be the high. That just many times as well. Moving on to some of the Big Ten here, Dennis. We've been talking about Apple here. 17-point range last week for the entire week. Every time this thing got a pop, Dennis, it just looked like it was greeted with sellers.
Yeah, I enjoyed your weekly comments there on a number of your stocks, and Apple's comments were funny. You were saying how it feels like there's more selling than buying in the rally, so and it kind of made sense, even though intuitively it doesn't, because you think when the stock's going up, there's more buyers than sellers. But it's just a lot of selling pressure here. It was topping out. The stock just is consolidating here now, so it's going to break either way, and I think you made a good point. We take out that like 558.73 low from 5 sessions ago, I'd start to get real nervous. Obviously, the low of the entire move back about a month ago was 555. That was before the earnings spike, so that's a key number to keep an eye on too. And then 2 days ago, we made a high of 575.88. So you're right, Joel. If we start to break up over that area, maybe get bullish. We start to break down below that area, 558.73. You start to get bearish.
Yeah, we should have known it was going to be under 565 today because late in the day on Friday I took a shot on the May weekly puts at 565 that went off the board worthless. So here we are now, 2.5 points in the money. Oh well, timing's everything in this market, Dennis. But keep an eye on that 558.73. Resistance is now going to move down handsomely. I'd say if you got anywhere near the close, maybe a good shorting opportunity. And better if it gets through there and you get stopped out, I'd like to have a good swing number at 568.58. Just moving on to a few others of the Big Ten. ExxonMobil cutting through a double bottom here, Dennis.
Yeah, well, right there, you mean here this morning in the pre-market it's cutting through, but I don't really put a lot of value. 82.26, not a lot of volume in that. You always talk about volume in the pre-market. There isn't a ton trade on the ExxonMobil, so keep an eye on it. I'd still say that 82.55 until it opens below there in the regular session. That double bottom is still in. It's trading there though right now, so it looks like it's going to dangerously open close to that and possibly take it out. And like you said, if it does take it out, I mean, we had 82 on the target here for quite a while, that lower 81, 88, but then if you go below that, it starts to open up even more. So if it does indeed open below that double bottom at 82.54, I'd get real nervous with my longs.
And IBM just hugging $200, Dennis.
IBM, you're right, Joel. The $200 level is like a magnet on this thing right now. It's traded it for 4 sessions in a row. It's kind of even bottomed out here in the last couple of sessions. Is trading below there in the pre-market just slightly right now. Offered at 199.97. So this whole 200 area is still acting like a magnet. Eventually it will break out one way or another. That low from 3 days ago at 199.06 is critical to hold. If it takes that out, the stock will open up to the downside.
Okay, and just sticking with the oil theme here, 3-point range in Chevron Corporation last week, Dennis. Very, very quiet. Closed near the Thursday and Friday's low right there on the close. Weekly low 102.47. If you get a pop up to that area, I'd look for some good resistance in Chevron Corporation.
You could almost argue that whole head and shoulders thing kind of forming here too. This 104 was the old shoulder, spiked up, got to the whole 108 area up here forming your head, and now it's come back down through there and it's topping out again in that 104 area. So if that 104 area continues to hold as resistance, the stock starts breaking down. That's an ugly chart pattern.
Okay, and people don't like hearing about stocks going down. They like to hear about stocks going up, Dennis. So how about that move AT&T put on Friday?
And AT&T, both I've got upgraded. I think Credit Suisse was the one that upgraded AT&T and Verizon, upgraded them both. The stock obviously had a heck of a move up there higher, Joel. Got up as high as 33.92. And that's not coincidental, I'll tell you, because $34 had a huge institutional seller up there, and the high frequency guys, they smell that stuff out. They lean on those guys, so they were selling in the 33.80s and 90s. That's why the stock topped out 33.92 before pulling back. I'll show you just a closer chart just to Friday's action. You can see it got all the way up, spiked up, hung out there for a while at that high frequency resistance, and then started to sell off. So that 34 area still remains major resistance, with the 33.90s providing you high frequency resistance up there.
And just to close out the Big Ten with our two defensive stocks, PG, Procter & Gamble, tight range in that last week as well. 63.29 is the 8 and 9 day lows, and Monday's low was 63.36. So that is going to be a major support area for Procter Gamble. Expect a little bounce there. And then with J&J, same thing. Week close on Friday, right off the lows of the week, 64.23. Trading below that in the pre-market, but use that 64.23 to 26 as a swing area.
Yeah, Joel, you highlighted a good area too. This thing is 65. You said in your weekly comments there on the site, 65 has been topping out there for 3, 4, 5 sessions. So this whole 64 and 85 to 65 area is major resistance for the stock. So for whatever reason we turn around, start rallying on some of these defensives, which you sometimes see even on the down days, that's major resistance up there. But I don't know. None of these charts look very great to me. That's the whole trouble. I think that's why we're seeing such a weak market here today too. Maybe everybody's looking at their charts over the weekend thinking, these charts aren't that pretty from a buying perspective.
Okay, looks like Carl Icahn's up to his old tricks again.
Carl Icahn, you got to get a kick out of this guy. Always coming. Well, the Wall Street Journal, I don't know if it's been officially been reported, but the Wall Street Journal was reporting that Carl Icahn might announce a big stake in Chesapeake. I mean, this is what he does. He comes in, he buys, a huge stake in some of these companies. Sometimes it's ones that have been beat up, and then, obviously he announces, and it gets an immediate spike. Oh, Icahn's in there, so it gets a spike. So he's immediately up, and then a lot of times he'll put, an offer up. I'll buy 5% of the stock, at $17 and trying to spike it up higher even, basically just, talking his position more than anything. And that's probably why the stock spiked up here this morning. Interesting enough there, Joel, I was just joking there on StockTwits. It was trading at 16.10. I'm like, these Icahn spikes are usually short-lived. Man, the thing's already come down. I didn't think it was going to be that short-lived. It only held up there for about, half an hour this morning or an hour, and now it's back down to 15.50. So it got as high as 16.17. Now trading 15.48, so it's already given back half the gains, Joel. Icahn not doing that great at spiking this stock.
Yeah, well, unless he's, unless he started buying on Friday, Dennis, I don't think he's got too much of a profit going on this. Is that 1650 level was just holding up, just holding like the guns there, and we took it out finally, opened just above 17 and then tanked. You can't get too fooled by these kind of things. I mean, we did spike up to 1624 in the pre-market. That coincides with the old 52-week low at 1635. So I'd keep an eye on that area. And frankly, Dennis, until the stock gets above a couple closes above $17, I just don't think you can fight the trend here.
No, you can't fight the trend. I'd be a seller of rallies in this thing too. I don't know if I'd short it down here because it's just fallen so far, but I just wouldn't want to own it either. 1538, we stay on the show long enough, this thing's going to be flat on the day. Nothing can seem to give this thing a lift. JP Morgan, interesting enough, I think JP Morgan gave it a downgrade today too, so that doesn't help.
Okay, Ding Dong, Avon's calling again, up $1.16. I guess Warren's getting involved a little bit.
I don't know if Warren's getting involved, but the stock, this is, we talk about stocks in play, you can't really trade them technically, but man, this thing has traded technically, even though it's been in play. Every time it gets down to this 1950 area, it spikes up. 1950, it spikes up, and it spikes up over 22 a couple of times, spiked up again, got down not quite to 1950 on Friday, got as low as 1983, but then spiked up to 21.18, now trading 21.35, so it's trading higher again. I mean, we've topped out a couple times at 22.13, 22.12 a couple sessions ago. If it does continue to spike, you got major resistance up there in that 22 area, Joel.
It just seems like the street is not convinced that this takeover is going to go through, Dennis.
Yeah.
I mean, is it the offering price like $23.75?
Yeah, I think it's up there. I forget now. They raised it a couple of times, Cody. But they did say this morning that the board is going to respond within a week to this offer. So the board has just basically flat out been refusing these offers before, so now that they didn't flat out refuse it, they said we're going to basically formulate our thoughts this week and then respond, makes you think, well, maybe they will accept it. And I think that's what's got the market excited a little bit here this morning, with the stock trading up $1.15 in the pre-market.
Okay, I know they were decoupled from the European banks, Dennis, but geez, sure doesn't feel like it.
No, these European banks keep continuing to make lows here, Joel. You got Deutsche Bank which is actually spiking right down to its low from a few days ago. Got down as low as 38.46. It's trading 38.54. You've got ING trading down here again this morning. It's trading at 632 right now, which is dangerously close. That's actually through that 638 low we made the other day. Barclays, another one. BCS. These European banks are all breaking down. It's at 1230 this morning, which is through to its new low of the move here, this 3-month low. So all these European banks charts are ugly. They're all making new lows. Even our U.S. financials here, Joel, most of our U.S. financials are making new lows of the move. Goldman Sachs, we talked about 100. It's getting really close to it now, 101.25. It's only a $1.25 away. I wouldn't be surprised if Goldman Sachs actually does test the 100 level today here, Joel.
Okay, Dennis, here we go, getting all negative again on our investors here, and it's just not fair, Dennis. People don't want to hear about things going down. They want to hear
Give
about
them some
stocks.
positive, Joel.
Yes, come on, man. We're all grumpy and everything. Time to get long. But the home builders, Dennis, getting some upgrades this morning.
Joel, they are. The home builders, it's Guggenheim upgrading almost every stock in the sector this morning. And surprisingly enough, this is something that I didn't really notice here either. Most of these home builders are actually approaching their 52-week highs. Believe it or not, when everything else doesn't look good, what sector is actually looking good is the home building sector. How ironic is that? Anyways, Toll Brothers here upgraded. Ryland Group, which is RYL, got an upgrade. Pulte Homes, PHM, with an upgrade. DHI, which is DHI, which is DR Horton, upgrade as well. Joel, Guggenheim coming out upgrading all these stocks. Some of them, like we're down 10, 12 bucks here right now, so some of them are trading flat, but this could be a source of strength here. Some of them are actually trading up in the pre-market.
Yeah, well, I don't think they're basing their upgrades on the new home building going on in Michigan, Dennis. I just, from here, from a fundamental standpoint, just with so many houses on the market, so many houses going into foreclosure, I just don't see how there could be that substantial pickup in the housing industry. But the charts are telling me that I'm wrong. So the only thing I could do is look at resistance. This 2334 in the Ryland Group was the high on Wednesday. Thursday's high 2337. Looking at the pre-market activity, Dennis, we really haven't got up that high. So little bit over 2280. I mean, you folks can go out and buy these stocks off the open based off this upgrade, but I think history will tell you that the upgrades and downgrades on a lot of these stocks and a lot of sectors is not always the most reliable trading tool.
Yeah, it's short term. They often do get a spike off of these upgrades, especially when you get the whole sector going up like that. Longer term, it's hard to say whether these upgrades or downgrades really, if you're buying every time they upgrade, I think probably you're actually maybe do worse with that, because they tend to upgrade stocks when they're doing well, and they tend to downgrade stocks when they're doing poorly. So from a longer term perspective, that's kind of, going a momentum play, and contrarian obviously sometimes works in the longer run better in my opinion, but that's talking the longer run. Short run though, these things could get a little bit of a spike off of this. So, and they are approaching 52-week highs, and from a trading perspective, I always like to own stocks that are making new 52-week highs as opposed to making new 52-week lows.
Who's Guggenheim?
Well, they're not huge, but when they're big enough that it's not like a J.P. Morgan or a Goldman Sachs, middle of the road, but they're definitely have a street influence. So it's something to note when they upgrade 10 different stocks in the same sector. So definitely something to note, anyways. But it's definitely not Goldman Sachs.
And just getting back to that J.P. Morgan, Dennis, do we have anybody rushing to the rescue and upgrading this with a strong buy based on valuation?
No, and maybe you'll see that happen, but I think everybody's a little bit nervous to even comment on the J.P. Morgan situation until we find out a little bit more, of how the risk management really is going over there, Joel.
It's not going very good, Dennis.
Not on that trade.
Yeah, then we still don't know if it's late. I mean, I've heard options and equity swaps, and it's always interesting when you hear them taking these kind of losses on a hedge because I always thought a hedge was supposed to mitigate losses. But whatever, enough beating up on Jamie Dimon here, Dennis. What we need to focus on is what the S&P futures are doing. How many times have we had these nice down opens and then just make the low of the day and just rally and rally and rally? Is that going to be the forecast for today, Dennis, or are we going to finally get a nice flush?
Man, it's hard to say, Joel. I think you got to keep an eye on that 1344 old support level. Maybe that does become resistance now. It always seems like there's a shakeout. Nothing goes straight down, nothing goes straight up. So I still think, rallies are to be sold. I mean, they gave you a nice rally on Friday. That was a good opportunity on some really bad news. This is follow through here today. I think anybody that was buying the dips on Fridays is, feeling the pain here this morning, and they'll probably be nervous and thinking about trying to sell if there's any type of a rally. So I think you get up to that 1344 area, I think you'll be met with some sellers.
Okay, well, as always, keep an eye on the overnight low wherever it ends up to be. 1335.75 is where it stands right now. So keep an eye on that. Dennis, a good point there for Thursdays and Fridays lows. Perilously close to each other, 1344 to 1345.75. So we'll keep an eye on that for a pop. And we'll just try and be more positive tomorrow, folks. We'll be back with you.